Hi everyone, my name is Anne-Marie Band. Today is Wednesday, March the 13th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are going to look at the 4-hour charts today to look at expansion and see why we are still in this mighty buy the dip zone, but we're sitting at the top of a range. Now, yesterday I put on an iron condor that exploded outside of the top edges of this area. I had a meeting outside of the office and I added on the top of this range, and now I'm sitting upside down in this formation. And hopefully those of you that realize, hey, listen, you set the alert at the top of the edge. If it pulls back and then begins to run again, you know it's still in a buy the dip formation, and you've got to get out of that trade if you're uncomfortable with that risk. Today we've got the EIA report and we've got a 30-year bond. Other than that, news is a little bit light. What we are seeing from a technical perspective is still buy the dip. We're sitting in extreme territory, but notice this extreme territory in times past gives us new highs, but it also tells us, listen, at the top of the range, you can short it. And so that's what we'll be looking at today. Please remember that I will be completely out of pocket tomorrow. And so you're not going to get a morning report from me here. But today, what are we looking at? 515.80 as the floor, 517.80 as a potential ceiling. Could we get a brand new high? Yes, we could, but that is not going to be a buy zone. It is going to be a sell zone. People who have been trading momentum from breakaway formations, if they haven't taken their profit quickly on the top of these ranges, they are getting smacked. And the same thing is happening here. Take a look at the wicks. See these wicks? It means that people rush out because it's gone higher than the level and they go, oh, this is buy, and then the market collapses on them. Same thing happens. They think it's a short, they go short, and then the market begins to bounce. Don't get caught there. Realize that what we are in is a buy the dip and sell the spikes. You do not want to go long into the spikes of these formations. Go long at the dips of the formation and you'll be in good shape. Let's take a look at the cues. We're going to have a short run today in terms of, whoa, look at that. Okay, these guys are looking a little bit more sideways. Take a look. Same over extended smooth stochastic, right? We have a double smooth stochastic by the incredible William Blau. I think, he didn't live past the early 2000s, but my goodness, did he give us some incredible statistical indicators. Love the guy. If you're looking for anything to read that's geeky about technical indicators, you got to check out William Blau, B-L-A-U. All right, so here we are. This looks a lot more sideways than the SPY, and that's because I suspect there's rotation out of tech. I don't know where it's going yet, but there is definitely rotation out of tech. What are the lines in the sand, and what are we seeing? Same thing. Sell the spikes, buy the dips. That's going to be it for us today. Where are we sitting? Well, we're sitting at near a spike. Rotation here, right? Moving averages are sideways, so the spikes could be very low or very high. Your job is to wait for it to completely extend and then begin to break down either below the 447 area or above that 437 area. So again, 10 points in motion there for us to look at. If we want to look at the diamonds, those of us that trade things like this, I don't like trading the diamonds simply because if we use option chains, the chains are not as liquid, the spreads can be wide, but we're looking at the same thing. It is buy the dip, sell the highs, sell those spikes into prior highs that you see. All right, let's take a look at the futures. We've got our ES, error fetching. Oh, I hate it when it does this. Hang on. Okay, here we go. Taking a look at where we are in the ES. Here are brand new highs. Almost. The brand new highs will be up over 52.50. And this, of course, is in the forward contract that we are watching it, but pretty sideways. Again, we're looking at 4-hour candlesticks, not daily ones. I have no idea why the VWAP bands are not, oh, it says error fetching. Well, let's do 30 minutes, okay? There we go. So here's what we can see: strength, buying pullbacks. See how long it's staying up in this area, right? It is by the dip. How do you know? Because trend is up. And that's what we need to look at today. What are the lines in the sand? Well, I just drew one, 52.50. And then we've got support edges of 52.31. Below that, an important zone at 52.21. And then this key area that I expect us to rotate into, and that number is 52.04. All right, this is my suspicion about what is happening. Remember, see this, how tight it is here? We're going to have a volatility expansion event. It's either going to expand to the north, where we get 52.70. If you follow Adam Mancini on X, you'll see that he's got these numbers up here. Suggested this tight volatility band here tells us that we could expand. Of course, I'm thinking that we should expand to the downside because, listen, it's a fact. The people pushing these prices higher are shorts, buying to cover. That's why they're getting exhausted up here and not giving us the breakaway. The smart buyers have been down here on the deep dips. All right, let's take a look at the NQ. Same sort of thing, not nearly as strong, right? Should be a little bit of a warning signal for those of us that have been hanging out in tech for a long time. This chart is tired, and so it's in a reversion to the mean. It's under the VWAP already. I suspect, we don't really have any news coming pre-market, but I suspect this is what is going on. Wednesday, midweek, if we hold the lows, if Wednesday holds the low of the week, it's going to look like the last 4 Wednesdays, and that's going to mean that we ramp up Thursday and Friday. So this pullback into these sluggish areas is going to give us another buying zone that can take us into positive areas into the edge of the week. The last one I'm going to cover today is YM. Sorry, gold and oil traders, just don't have time for it this morning. Take a look, see the volatility bands tightening, and then see the overbought. I hate using that term because things aren't overbought until people stop buying, but this region is very hot. Look at the wicks. You see it? See the wicks up high, see the wicks down low. That's going to happen in this kind of area, especially when we've got trend. So what are the numbers to look at? New highs in the Dow have not come across. We've got this very noisy patch right here that could be the top of the range, 39.48. Baseline, I'm looking for the test of 39.423. And then yesterday's VWAP close, which is 39.355. If we have more range expansion, good on you, right? The big thing is wait for the dip. There's that 20 exponential, loves to come in there, but let it resolve instead of going, hey, I'm buying the 20. We have no idea what that's going to do. Wait, let it collapse, and then let it hold the level. Remember, we look at the 2 candlesticks past and then the present candle. That tells us what we're doing, and it keeps us on the right side of the trade. Good luck trading, and I'll see you at the midday Zoom.